Welcome to Good Money Moves, the show where we share financial tips and advice to help you feel financially empowered. I'm Jenna, AVP of Marketing here at First Alliance Credit Union, and joining me today is the lovely Robin, our Employee Experience Manager. I knew I was going to fumble that one. Employee Experience Manager, and I have asked Robin to come in and join us today because I want to dig into something called the invisible paycheck, and we're going to talk all about what that is, but just know we're diving into benefits packages and the things that you need to know as an employee when you are being introduced to the benefits package at your employer, or maybe they're changing or you're starting a new job. This is the podcast for you. So before we dive in too deeply, Employee Experience Manager, what does that mean?
Yeah, so Employee Experience Manager is really a fancy title for HR. And I think we're all familiar with HR and what HR does, but benefits package, your paycheck, that's really what lies in employee experience.
Awesome. So the perfect person to have to talk about this today. Shocking.
Absolutely.
That we have the right people here. All right, so let's dive in at a high level. So benefits are often kind of referred to as the invisible paycheck. Talk a little bit about what that means.
So first of all, let's start when you think about your paycheck and really what is that? Most people are like, well, it's the money that hits your account every 2 weeks, once a month. But really, so what you're talking about, Jenna, benefits, your benefits package, that's really what's referred to as the invisible paycheck. Those are those things that you can't necessarily see hit your bank account, but oftentimes they can have a really big impact on just your whole financial picture. So
let's maybe talk a little bit about what we mean when we even say benefits. Like what all does that encompass or could encompass?
Yeah, so that's actually, benefits can be a lot of different things. It can be your health care. It can be EAP programs, so your employee assistance programs. It can be your paid time off. It can be your vacation time, your sick time, and it can be a number of other things as well. But those are usually the biggest things.
Okay, perfect. So let's just dive into maybe that first kind of topic that you brought up. Well, maybe it wasn't the first, but you mentioned healthcare.
Yes.
And I think that's maybe the biggest one people think about when they think about their benefits package is my employer going to cover my healthcare costs and how much, right? So Talk a little bit maybe about the different types of plans that people might be introduced to as they're being onboarded to a new employer, or that might be promoted in a job description. So just to kind of help people understand some of these acronyms that might be thrown around when it comes to healthcare benefits.
Absolutely. So typically in healthcare, I would say there's probably two main packages that our employers offer. One of them is going to be called something called a PPO. And that really is, if you will, it's you pay a small portion of a visit. So you pay your $25 copay when you go to the doctor. So it's really that smaller copay. It's really time visit by visit, which can be a really good package and a really good option for maybe somebody who visits the doctor a lot, or maybe have a lot of health issues. That can be a really good package. A secondary healthcare option that is becoming increasingly popular is something called an HSA, or a high deductible plan. Okay. And that really is, you pay your costs kind of upfront, and then once you hit your deductible, then all of your insurance is paid out. And on top of that high deductible, there's also that HSA piece, so a health savings account. And that's an account that goes with that high deductible plan that allows you to kind of put money away for those healthcare costs. And usually it's tax-free, so you kind of get a little bit of a financial benefit with that kind of health plan as well.
Yeah, so if I'm hearing you right, it sounds like the PPO plan is maybe a little more friendly up front to the budget, but you maybe are paying a little bit higher premium for that versus that high deductible plan that comes with the HSA. You're maybe paying a lower monthly premium for those, but overall kind of that initial amount that you're trying to meet for that deductible is a lot higher. So that's why you need that HSA to kind of go along with that.
Correct. Yes. And there's a lot of other benefits for the HSA too. You know, you talk about it can help you meet those benefit costs up front, but it can also, those plans are super great for buying from Tylenol to tampons, really. Yeah. I mean, it really has a wide range of things that you can buy with that HSA. On top of which, there's also tax benefits for that HSA too. So those are all things to consider when you're looking at healthcare plans.
And so you bring up, I mean, the tax benefit, we're not going to dig into that. We're not tax people here. But so maybe talk a little bit about how each plan, if as somebody's trying to evaluate, but maybe they are given two options or they're given two job opportunities. One has the PPO, one has the high deductible with an HSA. Like, how should somebody be really looking at these plans when they're thinking about their bigger kind of invisible paycheck and that bottom line impact on their budget?
Yeah, so we come back to that invisible paycheck and how those necessarily aren't things that hit your bank statement at the end of the month. So really some things to consider when you're looking at that invisible paycheck, especially when it comes to healthcare, is maybe you take your scenario and really start pricing it out and really looking what your cost is and what your employer is contributing, because that's really the hidden piece right there, and that can make all the difference in the world. A really good example of this is if you look at, maybe you cover you and your spouse and you see that your healthcare premium is $900 a month. But on the invisible side is maybe your employer is contributing $1,600 of that total cost.
Sure.
So you really have to price that out. And it could be different if you're looking at that PPO versus an HSA or high deductible medical plan. Those costs can sometimes kind of differ. So that's definitely a place to start looking, because that's really where you're going to see that invisible paycheck.
Sure. So if I put this a little bit differently, just to make sure I'm understanding, it sounds like an employer is going to contribute some degree to that, covering the cost of that healthcare plan. It could be through covering part of the premium. It could be contributing to an HSA. Or a combination thereof. And so understanding what that employer contribution is how you really know the true lift kind of to your final paycheck, is to understand that contribution level.
Yeah, and a really good example, and I'll even just use our team members here at First Alliance Credit Union. We pay our team members health care for 100%. So where at somewhere else, you might go that the team member has to pay $200 a paycheck for their premium.
Sure.
Here on an individual level, First Alliance covers our team members 100%.
Which is amazing.
It
by
is
the way.
amazing. Yeah, it might be a plug here if anybody might be looking for a career here at First Alliance. We have some open positions for you. Is that shameless?
No. Awesome. So I think I don't want to spend a ton more time kind of talking through that, because there's so many other benefits I want to dig into at kind of a high level, and just kind of start digging into maybe another really big component I think that people think about when it comes to benefits through their employment, and that is retirement benefits.
Yes.
So pensions used to be a big thing. I don't know that really anywhere truly has pensions, other than maybe they've been grandfathered in for employees who've been there a long time. I think of, Mayo, I know has some employees that are grandfathered in through that, but that's not really a common way to do retirement plans through employers anymore.
Correct.
So what options are there? Typically when it comes to retirement planning for your employer?
Just on a high level, I would say the most common option is probably a 401k. And I'm sure that's probably something that maybe everybody's heard of in passing, but maybe people don't really understand what that is. So a 401k is an investment, and there's kind of a couple different parts to a 401k. There is the employee contribution, so employees can put money away, a designated amount, into an investment account, and that money will tend to grow over time. And then typically, you'll see that most employers have a employer contribution, and typically they will match some kind of dollar for dollar or percent for percent with employees. So in our case here at First Alliance, an employee could contribute up to 8% of their pay every pay period, and First Alliance will match 0.5% for every percent that the employee does. So First Alliance matches up to 4% if an employee contributes 8%. So, and that's just kind of on a base level, and those percents can kind of vary from employer to employer, but that's always an important question I think to ask when you're looking at a benefits package is, what's the 401k contribution for employer versus employee? Because that can make a big impact as well.
Yeah.
I mean, those are typically free dollars that we like to say that employers put on the table for employees to take advantage of.
Yeah, so really contributing again to that invisible paycheck.
Correct.
That you
yes.
aren't necessarily thinking about up front because it's not hitting your bank account immediately, but makes a big difference in 30 years, 20 years, 40 years,
yes.
whatever your retirement timeline
yes.
is.
exactly.
You know,
yes.
for that. So you mentioned, I want to talk a little bit more about that match and how important that component is if you are offered a 401k plan and your employer matches any level. Like how important it is to meet that match and really max that out.
Yeah, and I can't stress that enough. I said, I'll use the phrase again, it's free money. I mean, it really is money that the employer is investing into that employee. So absolutely, I would say your best course of action is to max that out as quick as you can. And I know that's not always feasible for some people, and you really have to look at your budget, how much you can afford to put in, but you're really gonna maximize your dollars by putting the most that you can contribute and getting that match from the employer, so.
Yeah. So there's a term that comes up when we're talking about retirement funds and things like that. It's called fully vested.
Yes.
What the heck does that mean, Robin?
Yes, that's, it's actually less complicated than what you think, Jenna. So fully vested just means some employers will put restrictions around that 401k, and it's every year that you work, you get to take a percentage of what the employer has contributed with you if you were to leave. So again, I'll just use First Alliance because that's my background here. For us, it's you are vested 25% for every year of service up till 5 years. So once 5 years you've been employed, every dollar that First Alliance has put into your 401k for you, you get to take with you. Okay. So again, it's that free money on the table, but you do have to work for it per se.
Yeah, so that longevity kind of pays off a little bit.
Correct. Yep, it sure does.
Okay. And okay, so talking about longevity, I want to transition us into another very important topic, paid time off.
Yes.
And I know that many employers, the longer you're there, the more you accrue your PTO and things like that. But before we dig into kind of the nitty gritty of that, I do, some employers bucket all of your paid time off together. Others have different buckets for things like vacation or sick time. Like, just talk a little bit about maybe why some employers might have them separated, what it means when they're all in one bucket, and just kind of what should somebody be looking for when they're being offered their benefits package and they're being explained how their paid time off works.
Yeah, so there's a lot of things around paid time off, and we use paid time off as kind of the general category, but really, paid time off it's kind of its own bucket, if you will. If your employer is using a term like paid time off, typically that means all your time is bucketed into one big bucket, and you can use that paid time off however you see fit. So if you need to take time off for sick children or for your own sickness or health issues, you can do it, or you can use it for vacation. It doesn't really matter. Some employers do have separate buckets for those things, and that's when you're kind of looking at a sick and a vacation bucket. Sometimes when employers have those separate buckets, there's more rules around those, that maybe they only get X amount of hours in a sick bucket, and then the rest kind of fall to vacation. And that's really important to understand because that can help you decide how you're going to use that time. We don't always get to plan when we're sick, so that bucket may be emptier a bit quicker than, say, your vacation bucket that you can use at any other time or for any other purpose. Typically, those dollars are matched along with your pay. If there's either a full PTO bucket or vacation versus sick, usually they're at the same rate of pay that you're currently earning, but that's also a really good question to ask too. So you'll also find that some employers offer things like PTO buyout, which means that you don't necessarily have to use it, but you could buy it out at your rate of pay instead as well.
Sure.
So depending again how your employer uses those buckets, sometimes people can use those as a little bit of a savings account, if you will, right?
Sure.
That you can use that PTO or buy it out if you would need to.
Yeah.
So, and it's also important to know that your employer might have other buckets of time off as well. So we're just talking about paid time off, but there might be things like volunteer time off where you get paid to volunteer. That's definitely a benefit that we offer here at First Alliance. But that's a really important question too, is maybe to ask if there's any other buckets of time off that might be included in that vacation or sick or PTO.
Yeah. So the other component that I want to dig into a little bit with this is that I kind of mentioned it, accrual, and how that, because I was really confused when I got my first job that offered PTO. Like, I don't understand this like little percentage that I'm being told I'm earning or accruing. Like, how? So break that down a little bit and talk about how to understand those numbers.
Yeah, absolutely. That is another thing also to ask is how maybe an accrual works or how people get their time off. Some employers offer it. They will just put 16 days worth of vacation right in their paid time off bucket immediately, and people can just start using it right away, day one. Other employers, they have an accrual system. So they might say every year you get 16 days off. However, it is earned as you work. So for every hour that you work, you earn a percentage of paid time off. That's kind of how we work here at First Alliance. Again, an example from here is we work on an accrual basis. That means for every 80 hours that you work, you get a certain percentage of paid time off. And that certain percentage changes with every year of service that you have, or there might be like for in your first year versus year 2 through 5, you might have a higher accrual rate. Sure. So
So hopefully over time you're building up a little bit more, and then the longer you're there, you accrue it just a little bit faster. So it's kind of like a benefit for longevity, but also a benefit to ensure that employees have opportunities to take time with family or to be sick or whatever.
So
they
it
kind of covers a bunch of things.
So
I think we have time for maybe one more question, and I do want to dig a little bit into like parental leave policies, and I know that it can vary state by state. I know that it can vary, employer by employer to some degree. But talk a little bit about like, does parental leave fall into this like PTO bucket? Is it a completely separate thing?
Yeah, well, and that's a really good question, and that is it's going to be based on your employer, and you're going to really have to ask those questions. Here at First Alliance, we do have a parental leave policy that we go into. It isn't, you can use your PTO for it, or you can take unpaid time off for that, for parental leave if you want. And it opens a little can of worms, and I don't want to get too deeply, but we have something here in Minnesota that we're going to be starting some paid family medical leave. That is also in that bucket, and some things to consider as well. So
it's a big, that could be a whole episode in and of itself, but I wanted to address it because I think that's a question that people really don't understand how that works and why it works the way it works, but
Sorry to just drop that bomb.
No. I asked the question, right? But what I do kind of want to talk a little bit about when it comes to that is, because you mentioned you can use PTO, or you can take it unpaid. And some employers I know, and this is again going down a rabbit hole right at the end of the episode here,
Absolutely.
But there are other types of insurances that people may opt into that can help cover some of those costs. But again, separate episode. But from that invisible paycheck standpoint, let's just kind of bring it back to PTO overall. Like, how does that impact somebody's invisible paycheck at the end of the day, regardless of what bucket that's kind of falling into?
Yeah, absolutely. So if we're really talking about like parental leave, and depending on how your employer has it set out for you, even though it's unpaid, that time can really be just an invisible benefit to you. And you might not, again, see it on your paycheck, but just being allowed to have that time off, whether it's unpaid or paid, can really be a benefit to you, especially if you have family members that really need health care, or you need to be their primary caregiver. That can really be a benefit to you as well. So.
Awesome. Well, like I said, we are out of time. We opened a can of worms, and maybe we'll dig into that can of worms in a few more weeks. Robin, thank you so much for being here. This was very, very informative, and this has been Good Money Moves. Thank you so much for tuning in. Make sure you like and subscribe and follow us so you never miss an episode. excuse me, and never miss an episode. And if you want to learn more about the in and outs of benefits, please check out our website at firstalliancecu.com. Thanks so much for watching, and until next time, stay financially empowered.